Now, let's start off by talking about what is it that is looking solid and what is not, because there are two or three things. One, that the earnings are looking solid, but two, the fact that the market is not reacting too negatively to even an oil price surge, which means that the call that Manav Chopra had given some time earlier to us about the trends looking good might be turning out to be true. And Manav, great having you yet again in the studios. Thank you so much for being with us. And it was a great calling, because at that point of time, not too many people anticipated that there is an upsurge. Now, we haven't had an upsurge as yet, Manav, but asar theek dikh raha hai.
Absolutely. In fact, if we see, we just go beyond the layers, what was happening beneath the markets, like, last few months, the markets actually has climbed a wall of worry. The right reflection for the markets, for me, it's not Nifty 50, it's always Nifty 500, and we've shown what the market usually talks about. That's a 97% of market cap. Okay, so we bottomed out in April, we formed a higher bottom again in the month of June, and recently, after a recent short-term correction, another higher bottom formation in the month of July. So the market is climbing a wall of worry. The trend is definitely bullish. The breadth is expanding. What the missing link is the momentum factor. When all these three emerge together is something what, everybody is very usual about it. They are comparing, it's not like a 2023, even though you are at all-time highs. The factor is that the market is slowly, steadily climbing higher. We've seen the breadth expand. A small example of what, say, there were 80% stocks below 50-day average in the month of April. And in no time, that went all the way above to 80%, which was turned bullish, and slowly the long-term breadth is started to improve. So I think, despite of the knee-jerk reactions that the market has witnessed, we haven't seen any crackdown into the markets. The FI holding from 22% came all the way to 11%. There's no froth in the market in the large caps. You see your Nifty 50 equal weighted index and the normal weighted index. The equal weighted index retraced 80%. But the normal weighted was not even able to exceed 24,000. So it's a very clear indication that the leadership has shifted from the large caps more onto the broader markets. The broader market breadths are intact, and I haven't seen any time market crack down when the broader market has been bullish or turning bullish. So that's one of the clear inter-market signals which kept going for us, and we maintain that eventually we will get into a phase where the momentum factors will be positive for us.
Okay, so to add to that now, when you're talking about that movement that's shifted to the broader markets as well, then if someone has to look at levels on Nifty 50 as well, would you say that we will be able to break out of that zone of 24,300, 24,400, number one, or people should actually anticipate consolidation for some time and ignore that consolidation in terms of Nifty 50?
The breakouts, like you said, everybody wants to hear, have we broken out or not? But eventually, I would just flip it other way. I would like to say, we are in a strong buy on dips. Okay, so any retracements you see, eventually, just few weeks back, a break of 23,800 just got bought into at 23,600, and then again we are trying to breach 24,600. So Nifty breaking 24,600, it's just a job of 3 to 5 stocks. Not beyond, right? I mean, if you just look into the maths. So yes, tactically or logically, you need that validations because of a lot of short squeeze. But if, like I said, if you're looking into the broader market scenarios, obviously Nifty has seen the breakout today that we're witnessing. But more important, you see what next 50 is doing.
Is the breakout you're saying?
Yes, the next 50 has already witnessed a breakout a couple of weeks back. And I think if a good portion of a large cap has already started to move higher, eventually it is just a number of few stocks which will eventually evaluate.
So the question then is, and you talked about the widening of the breadth, etc., right? And that we've been talking about it for some time, the duality of the market where the large caps are not performing. To a certain extent, the earnings has borne that out to say that the broader market earnings is stronger. So therefore, when do you see that pivot happening? Do you see it happening? And you said 3 to 5, but I would narrow it down to 2. But we won't talk about which ones. When do you see that pivot happening?
See, largely, I think a lot of names are anyways in a structural or trying to form higher bottoms. Okay, let me, certain names like an Axis Bank or an HDFC, they have been holding the stocks, the Reliance. But if I just go beyond, I think the focus will be where do we create alpha, which are the spaces would be, and whether the SMID rallies still continues or not. I think that has been the bigger, larger question.
That is the question.
So if you look at the small cap 100 index, if you see, it has actually seen a ratio breakout after 2008. In fact, a lot of people question that, the small caps have already rallied ahead. If you see a small cap 100 ratio versus Nifty 50, it has seen a breakout recently after so many years. I think that's a bigger change that one has to look into it, despite of it doing fabulously in last 4 years. I think there is a lot of alpha which was still there in the small cap spaces, and I don't see any reason why one should take a pivot back. I think that's the space one should be in.
Interesting.
Goes without saying. And there are a lot of sectors which are expanding that phase. So my focus will be SMID. And I will not be surprised when we meet next time, maybe after a reasonable amount of time, we should be...
No.
He's just making himself clear now.
No, but aap aao, logo ka confidence badhao, because people are still in a denial mode, right?
Okay.
People are hurt over the last 18 months. Confidence nahi aa raha logo ka rally hai. So it's good to hear you. But sorry, you were making your point that you won't be surprised.
So I will not be surprised. Maybe another 10% happens in the next, in one quarter or 2 quarters.
Where?
In the small cap
space.
indices, like the small cap index and the mid cap index, they both, as an index level, they'll be up 10%. I is my base case, but in the next 12 to 15 months is where I see a sustained bull market to be there within the small and the mid cap, and upside of 20%. So 10% the lower base case and 20% a fair base case.
Just very quickly, what pockets, because this earnings season, if you look at it,
Sure.
one, that autos are doing very well.
Absolutely.
And two, pharma and chemicals
Right.
have really shown some fundamental strength. Is there chart strength there?
So my preferred 3 spaces in the SMID within the packs in the pecking order, auto anchors, I think fabulous. I mean, the trends are very good. The breadth of the trend is expanding. You see the names, it's really expanding. So auto anchors, I think it's not in a matured state, but still in a mid stage of a larger bull phase. So auto anchors within the small and the mid are the places where you should be in. I really like, and I think they should do fabulously, and they will outperform the auto as a sector as a whole. One of my spaces that I still like is tires, which have still not played out, but yes, they will come back. Healthcare, you see a lot of diagnostic names after multiple quarters have started to break out. So healthcare, and the other is microfinancing is what I really like.
Interesting picks. And I think BFSI is something that you've already mentioned last month itself, that rotation is happening over there. So I think that's a space you should be watching out for. But thank you, Manav, so much for joining in. Always a pleasure. And please do keep coming. I think the more frequent you are, the more confidence that the markets will probably build as well. So thank you so much, and always a pleasure.
Thank you.
I mean,